joining us with a look at the underlying technicals. Katie Stockton, founder and managing partner at Fairlead Strategies, as well as a CNBC contributor. And starting with Bitcoin, might be a little bit of a stretch, Katie, but in the past you've talked about it. Can be, we talked dog or tail and what wags whom, but it can be a gauge of sentiment for risk. And it definitely has kind of moved ahead of some of the equity markets, like the S&P is still range bound at about 4,000. Has there been positive developments in Bitcoin that make you think the lows are in at 16,000, or you still think at some point we test that 14,000 level?
Well, I mean, the positive development is that it has rallied enough to give folks an exit who are looking for one. We've seen, a 40% up move just this month alone. The catch with that is that when you see such strong, very steep rallies, they are more characteristic of counter trend moves. What would be actually more bullish in sort of a contrarian fashion for Bitcoin and other altcoins would be like more of a slow grind higher, because that's something that's much more sustainable than, I think at one point we had 14 consecutive up days this month for Bitcoin. So we're skeptical as to the sustainability of this rally, which we are still viewing as counter trend, but we would acknowledge that it did clear the 200-day moving average as one threshold on the chart. This has happened before, and it proved to be a false breakout, so we're not convinced we have a breakout here, but it is an incremental positive development on the chart. So we hope that this manifests itself in our longer-term indicators, which still very much point lower. We have oversold conditions in place, but they've been in place for many, many months now, and it's not until we see the upturns in those gauges that we can really feel confident that we have something meaningful. And because it's happened so quickly, it just hasn't had that impact yet.
So you think that it could be an opportunity for people that didn't sell on the way down, they could sell here? Or you're at neutral now for Bitcoin. Had you been at negative?
We had been at negative and we moved to neutral just to kind of impart that we're not bullish. So we're not bullish. We are looking for counter trend signals to develop as early as this week based on those trusty DeMark indicators that we use. And that to us would be something that would create some conviction behind using the rally as a selling opportunity. We have also notably behind the scenes seen some of the altcoins fall out of favor relative to Bitcoin. And that does show that there's the risk appetite might be falling off a little bit here.
How about the S&P had a good start to the year? NASDAQ had a pretty good day yesterday. Are you, would you call yourself neutral there now, or are you still looking for the downtrend to reassert itself?
I want to get excited about it, but I have to say we really just don't have any breakouts yet. We don't have any major improvement in our long-term indicators. The rally does show, to me, a little skittishness on the back of what we saw last week, which were some extremes in market breadth. We also saw a lot of overbought downturns last week. So we're really, again, here unconvinced of the sustainability of this rally. We do have resistance for the S&P 500, essentially in line around 4020 based on the weekly cloud. The 200-day moving average is also still in play as a resistance zone. We view these levels as cushions and not precise points. So we think that with resistance in line, with short-term overbought conditions having become widespread last week, and with still the dominant downtrend, that there is a lot of risk here, and we continue to watch for just the broader market, including the NASDAQ 100 names. We're watching the VIX, the volatility index, as it pertains to its 50-day moving average. If we see the 50-day cleared, that's at 2150 right now. I think we're maybe a point and a half away from that. A breakout above the 50-day has been associated with sort of volatility events and downdrafts in the major indices. So that's something that would be a bit of a risk metric to watch.